All right. So, who in this meeting has listened to the audio from the last, the kind of super community and original gangsters meeting? Has anybody listened through that already here?
Yeah, I didn't understand everything, but
Got it.
I think so. And there was no video, of course, so it's just a little teaser.
Yep. Okay. So, Alexis, it sounds like you heard through that. Tom, Bala, Aki, did you guys listen through that already too? You can also type answers if you want in the, there's a chat here. It looks like Aki did. Okay. Bala, by the way, can't hear you if you're talking, just so you know. I see your lips moving, but I can't totally hear you. So I don't know if there might be a mic setting issue on Zoom, but definitely don't hear you. Okay, cool. So Bala, when you get ready. Oh, hey, Aki, good to see you, man. Yeah, Bala, if you are not able to get your mic stuff working, you can definitely type answers or type in the group chat if you want. Okay, so why don't I start from the top, because not everybody maybe has the same context. Let me give you kind of a brief rendition of the history of sort of how we got to where we are now. And I want to spend most of our time today talking about what we have, some of the ideas we've had, and just kind of the current state of affairs, and would love to, of course, hear feedback on the stuff we've done so far. Also, new ideas are always great. Obviously, we've done a lot of thinking and a lot of exploring and a lot of trying to be creative, right? So maybe other people have creative ideas and they can share those. So just to explain the journey briefly, to start kind of from the beginning. So I think, as most of you know, we started the Merit Genesis block sale in October. And we had been, obviously, leading up to the GBS, we had done a ton of software development that I think everyone's familiar with, right? So we had launched a bunch of new features on the Light Wallet. We had built the Merit Market, and we had sort of added a lot of kind of functionality quickly, including some mining stuff, and just sort of very quickly trying to be ready for the GBS. Now, when Merit was publicly announced, I believe that was May that happened. I'm sure you guys all know this, but if you go back and look, you can see, if you look at crypto market cap in aggregate, right? Or even if you just want to look at Bitcoin, you can. What you'll find is that, of course, it was trending down since December, and there was a little bit of a sideways thing, and then it just from May just kind of kept going down. So obviously we were watching that, right? That's part of what we do, right? Is we're watching what's going on in the space, and we knew that we knew things were sort of trending down in a way that wasn't good for us. In the broader crypto community. So that was a concern from us since the day we launched. And candidly, that was part of why we delayed the GBS, right? Because we thought, our hope was that, okay, there's a little bit of a dip, and then the market will come back, and then we can launch the GBS, right? And of course, surprising nobody here, the market didn't come back, hasn't come back yet. And we're still down. I think in aggregate, the crypto market is down 85% off of the December highs as a total crypto market cap. And so so that was a little bit of course, looking back, sure, hindsight is 2020. Yes, if we had sort of predicted the future, we would have done the GBS a little bit sooner, because the market was still going down, and we thought it was a temporary blip and it would return, which it didn't, and it still hasn't. So that was sort of a part of our thinking. We said, okay, let's delay the GBS. We launched the GBS anyway. By the time we launched the GBS, we were, of course, low on capital, right? Which I think is, I think should not be a surprise to anybody in the community. We made it clear that we were funded through our first year, right? So we had, everybody sort of knew that in the community, that we were funded through 2018. And of course we were funded through all of the work we were doing in 2017 and then all of 18. And so as sort of capital was drying up and we launched the GBS, it became pretty clear pretty quickly that the GBS was not sort of close to where we would need it to be to like sustainably fund the entity going forward, right? So the interesting, I mean, like there are lots of studies I'm sure people have done and lots of averages we can go find. But I mean, if you look back in 2017, I think when you look at the top 10% of ICOs, which I think we consider ourselves to be one of the better projects. Like we had done a lot of development, we had put a lot of effort into it, a lot of usability that we thought was better than most peers in the space. If we were to put ourselves into that higher category of ICOs, I mean, all of those ICOs were 8 or 9 figures, right? So they were, I'd say probably the average is something around 40 to 50 million US dollars. And then of course the bigger ones were in the hundreds of millions. And we know that like EOS was like the $1 billion one. And so there was sort of clearly this benchmark, and it was pretty clear like within the first like 2 weeks of the Merit GBS that we were not on track to be even close. We were multiple orders of magnitude off of like a $50 million ICO. Like we were not even, it was not close. And so for us, that was, of course, a little bit of a panic moment, right? So we said, okay, well, shit, like we're not, this isn't like, we would have to 100x, the numbers on a daily basis to be even remotely close to like some sustainable thing that we could do over the long term. Because the thing you have to remember in crypto is like there isn't I think in every crypto today, there is not a sustainable model yet, right? So the way cryptos have solved this problem is they raise just a fuckload of money up front, right? They just have a huge amount of money up front because they don't have a way of sustainably making money over time. Because that's the point of decentralization, right? To make money over time, like Visa or MasterCard, you take a percentage of every transaction. That is, of course, not the point of decentralization. So largely most cryptos, I think, don't have a sustainable way to make money, which is why they raise a ton up front, because then they can kind of spread that money out over time. Theoretically, into infinity is the goal, unless or until they can find out some way to make sustainable revenue. So anyway, so at that point, just to kind of keep the story clear. So we were like, okay, this is not a good situation. Like we need to do something. And that's when I think Max and I largely went to the drawing board and said, okay, how can we, and by the way, like it got worse over time, to be clear, right? So like it started out pretty bad and then like kept getting worse. And so Max and I, went to the drawing board and said, okay, what can we do to like protect ourselves against a crypto recession, like a crypto bear market? So our first idea was, understanding that like so that comes from a place of what are our skills. So it's like, what can we do? What are we well positioned to do? Obviously as sort of good engineers and product thinkers, we said, what we're pretty well positioned to do is use software to try and take advantage of movements in the market. And that would allow us to have a market neutral exposure. In other words, if crypto is going down or up, then ideally we have some ability to sustainably fund what we're doing. So we said, okay, why don't we start to build some algorithms and build some models to trade the crypto markets? And so the original thought there, to be clear, was to say, okay, we have this GBS. We might be able to raise money in the GBS, and then we can make that money last longer if we can like turn it into more money, right? Because it became clear there wasn't going to be enough in the GBS to cover operations, right? So we're like, okay, we got to get creative here. Maybe we can make that money last a little longer if we can figure out some kind of some approach to intelligently trading that would basically allow us to take money and turn it into more money, right? That was the idea. So we started to do that, and that was, I think, Max, and you can jump in here if you want, but like I would classify that as a pretty eye-opening experience, because what we found very quickly was there wasn't a lot of liquidity in the crypto markets, and there wasn't a lot of trust in the exchanges. And so, I mean, this is like a whole separate conversation we can go into for hours and hours, but the exchanges largely, like there wasn't a good sort of approach that we felt comfortable with allowing us to have both long and short exposure to crypto. And of course, short exposure at that time mattered more than anything else because everything was going down. So you wanted to be able to short it. And that's what our algos, of course, were saying. And so there was a number of problems there. Liquidity was a problem. The reported volume was a huge problem, which relates to liquidity because all these exchanges are reporting that they're doing lots and lots of volume, but our original benchmarking and testing suggested that those volumes were just not the case, like they were not true. because we were able to move prices way more than we should have. So things started to get a little bit concerning for us in crypto as a space, because we're like, okay, the whole thing is dropping. The exchanges don't have sufficient liquidity. They don't have sufficient shorting mechanisms. Like, this seems like there's going to be a problem here from a systematic risk standpoint too, because like, there's a trust question with the exchanges and none of this stuff is regulated. So we said, okay, let's look at the broader markets. And that's what got us thinking about sort of global equities, right? So we started to think a lot about, like US equities, global equities, and start to say, okay, like, is there an option for us here? So we started investigating that. I don't know, Max, what would you say that is? Maybe like December at that point, probably November, December, we start thinking about public equities, right?
Yeah, about December.
Yeah. So that's when we start sort of focusing on that space. And again, all with the same ethos, which is like, let's like scramble to build something that can take money and turn it into more money and spread out whatever we would earn in the GBS. And so that kind of is what sparked the development of the software that we're going to demo. So we built a number of interesting things. I mean, I guess I would say I'd say we started with focusing on the derivative space. Max, should we show some of the derivative stuff, or you want to go straight to the equity stuff? What's your opinion?
Yeah, I can show some derivative stuff. Let me set that up.
Okay, yeah. So we started with, hopefully people are familiar on this call with the notion of options and derivatives, right? So we started with stock options on the US markets. And those are priced, there's a number of ways that those are priced, but the most popular sort of model is called the Black-Scholes model, which uses implied volatility to price what an option should be worth. And so we started to build some software in the beginning to say, okay, let's see if we can figure out if there are opportunities to either sell or buy options at at sort of an abnormally good price, right? So basically, that means if you're a seller of options, then you would want to sell for a price that's higher than what the volatility actually shows, right? Because people have to pay an option premium to have the option, and that premium is based on the volatility of an equity. So we said, okay, if we're selling options, then we want to have... Oops, I hear somebody talking, but I can't quite hear what they're saying. I think that's Hobo. I'm gonna mute you just for now, in case, unless you have something to ask, just because there's a little bit of background noise. And then if you have something to ask, of course, just unmute. So yeah, so basically we looked at options and we said, okay, there's sort of, there are opportunities either to sell at good prices or to buy at good prices when we sort of detect an anomaly. So that was sort of the first thing that we did. And Max, I think, can show some of that here in a minute. And then I'll sort of go forward. And what we found quickly was that that was a great, so it was like an interesting space, interesting set of strategies, but largely like the problem for us at this point in time in the journey is like we of course were running out of money at that point. We were essentially out or getting close to out, and the GBS wasn't raising very much either. So then we had built the system that allows us to take money in theory, right? Obviously we didn't have proof of that at that time, but like the whole idea was, okay, take some small amount of money and turn it into more. Well, we didn't have very much at all to sort of at that point, and we were not, and like the GBS stuff was slowing and the crypto market continued to be in a bear market. So we said, okay, well, this is tricky because options are highly leveraged instruments. So you could potentially lose a lot and make a lot. You have a lot of risk in these instruments. So we said, okay, well now, okay, we tried crypto. There was a lot of systemic problems there. We looked at options and derivatives. There's some interesting opportunity there, but like it's highly, highly leveraged and we don't have that much in the way of assets to work with. So like, let's go even one step more like liquid and sort of a safer starting point. So then we looked at US equities primarily. So just like stocks in the US markets primarily. So stuff trading on the NASDAQ, the New York Stock Exchange, that's where we started to focus. And that takes us into like, now the January, kind of February timeframe. So we kept at it. And the hope was that, at this point, like there would be some resurgence of the crypto community, that maybe the GBS would sort of have more life to it. Now, obviously, I'm sure, as people in the community have said, that we were sort of we hadn't been as good sort of interfacing with the community at that point in time, which is obviously true. And like I've said before, I mean, I certainly have regrets there. Not to make an excuse, but so people understand, at that point, we're like secretly trying to scramble to make this thing to like make the money last. And at the same time, we're at that point, it became clear that like even that might not be enough. So that's when we started reaching out to investors to see if there's some opportunity to kind of like keep the thing going. So there was a lot of sort of scrambling at that point in time. And also, you know, like as we were, you know, as we were able to, as we had to trim the core team in terms of full-time involvement, right? Because we couldn't afford to have the whole full-time team. There was just fewer and fewer of us to manage the community. So that's just so people understand sort of what was happening under the hood. What was happening under the hood is that we were scrambling to find investment. We were scrambling to build some software that could help us turn money into more money. And then we were also sort of reducing the footprint of the full-size team. And at that point, even the people who were still working on the team were getting pretty demoralized. So I think a lot of people were just not, I don't know, people didn't feel excited about interacting with the community. So that was sort of what was happening under the hood. I'm not making excuses. I'm not saying that's right. I'm just explaining what was happening inside the organization. So that is kind of, and you know, we went deeper and deeper on the sort of software side, and that's when we started to work on the equity stuff. So let me pause with the journey stuff and just make sure that like that people, I want people to understand what they're looking at. Like, because I think one of the operative questions I would have if I was looking at this would be like, why did you guys build this? Like, what is the point of this? So I want to make sure everybody kind of gets the thinking here. So let me pause quickly. Does anybody have questions about anything I've said so far? Is it at a high level making sense? If you have any questions, feel free to fire them away, either in the chat or you could do it on Chit Chat on Discord. You could do it in the chat here, or of course you could use voice if you want.
Also, can you guys see my screen? I'm sharing now.
I see it. Can everybody else see Max's screen? Yeah, okay. Looks like.
I'm outside, so how's the share? Was it fairly responsive?
Yeah, it looks pretty responsive to me. So good question. So there's a question from Hobo here. Let me answer that before we move on. And obviously we can go into more of these strategic questions too during the town hall, which I believe is I think it's on the 31st that we scheduled it for. So it should be 10 days from today, something like that. But strategically, it's a good question. So Hobo's saying, why was it a run before you walk situation? Why not market the GBS, or did you moving forward? How about poaching some extras from other coins to help out? So start with the beginning. Was it a run before you walk situation? Yeah, it could be. I mean, it all depends on, I mean, look, it's easy to look back in time and historically be like, we should have done X, Y, or Z. And it's hard to know because like, obviously we can't replay time and like go back and see what would have happened differently. You know, my honest opinion, so two things, right? At this point, we were pretty low on capital, right? So marketing the GBS in a significant way wasn't really an option from that standpoint. And also, and maybe this was sort of stubbornness or strategic, you know, a strategic mistake on our part, but, you know, the whole point of our belief was, and actually still is, that largely crypto business models are not sustainable. Like, I still believe that. And I think the reason they're not sustainable is because you have this weird ICO dynamic where you like let's say you do a 30-day ICO. Well, whatever money you do and you raise in day one, you basically like put that into Google Ads, right? And get more people to buy in day two. You get more people, and then you take that money and you buy more Google Ads, and you get more people to buy in day three. And so you have this weird dynamic where you're like, the money you're taking, you're actually spending on getting more people to buy, right? That's the common model that people use today. And that to me is a fundamentally unsustainable model. And by the way, the data backs that up, right? Like we did a pretty quick study, and you know, like other people can do their own studies, but like we went and looked at cryptos, like you know, both before and after ICOs, and we looked at before and after listing, and the same sort of thing happened, right? Which is like the price went up, of course, because you're using the money to buy more ads, and then at some point the ICO ends, and then there's a huge price crash. And so you know, you could call us stubborn, or you could call us dumb, or whatever you want to call us. But, you know, we didn't like want to play by those rules because those rules didn't make any sense. So we still don't think they make sense. I get that in the near term, like they have some benefit because like it looks like the price is going up because you're taking all the money and spending it on ads. The problem with that model, of course, is that at the end, like there's a huge price crash and you don't have like the operating capital you need to actually run the business because you spent so much of your ICO proceeds on marketing, which in and of itself is a problem. Not that I need to tell the community this, but like that's why I think we've seen other altcoins that have done like successful ICOs. Even those folks are disappearing because like they didn't have a sustainable set of unit economics that made any sense. So Hobo, that was so candidly, there was two reasons not to market, right? One is that it wasn't a sustainable model. And two is that we didn't really have a lot of capital left at that point. So our thinking was, just to be clear, the reason we wanted to build other software was our thinking was like, hey, a much more sensible model, instead of pouring money into marketing, is to have a system that allows you to take the money you raise and turn it into more money, so then you actually have sustainability. Like that to us made a lot more sense than just dumping the money into marketing. So that was sort of our thinking there. Poaching experts from other coins, I think we can definitely discuss that in the town hall. I mean, I'm sure that's a great idea among other great ideas. So we can definitely dig more into that. So hopefully that answers your question. Our thinking around this was to try and live sustainably and build something sustainable, which was ultimately the reason we built all this software, because we just felt the other model was not sustainable. Any other questions, comments, thoughts now before we go into more demo kind of stuff?
I'd also like to add one more thing, which is at the time we thought we didn't have enough funds to do a good job marketing, but we did have enough to do some testing on the other side. So it was kind of like a gun to our head situation.
Oh, like picking one or the other, you mean?
Yeah.
Yeah. So I think in some ways, I think what we did was we took the much bigger bet, which was like betting for sustainability as opposed to like marketing, which I think would have just like bought us a little bit more time, but in the end would have resulted in the same result. So that's a quick for what it's worth. Also, we were looking at other ICOs at that time, and I'm sure everybody can all look up the same data, but there were few, if any, successful ICOs during that time. So like the average ICO price was plummeting. And I'm in a couple like crypto groups with other crypto founders, and much of what I was hearing was that like none of the marketing was working because the interest was pretty much dead. Now, I don't know if that's true or not. I didn't spend the money to experiment with our own dollars on that, but that was what we were hearing out in the space. So it didn't seem like the right investment, both from a macro and micro point of view. Any other questions, comments, thoughts? Should we move on to some demo stuff? Okay. So Max, why don't let's show them here. So Max, why don't you show some stuff, and I can talk it through if you want while you're clicking through, whatever you want.
Yeah. So after we decided to experiment with non-crypto things, the first thing we looked at was derivatives and option trading, so we built some prototypes to do some things. So this one, what it does is we want to compute option chains and figure out the appropriate prices for the to do either buy or sell options. And one typical approach used to compute kind of like probability of the future prices and the ranges of possibilities was called Brownian motion, which is a typical technique for doing that. So, for example, it would have assumed the Microsoft, like these are kind of like the price simulations for Microsoft and where they'd be at different times.
Yeah, think of it like a big like Monte Carlo analysis, but with
Yeah, and so I thought maybe we could do better price analysis and use trained, like do deep learning and figure out if we could do like better simulation of possible futures. And so here's one that would, here's one that looks at future prices based on how they've acted in the past, but it's a bunch of different future possibilities. It's kind of similar to if you've heard of generative adversarial networks, where you can take a latent space, which is like a multi-dimensional space with it's kind of hard to describe, but you tweak it and you get one possibility. So this is running through many different possibilities, and you get kind of different scenarios of the future. And the idea was that we could use that to find under or underpriced options, or figure out if people are figure out if the prices on the options are accurate or not. So this was just a small demo for that, and then
so coming back to what I was saying earlier, right? Like in the derivatives market, you're selling, for those of you that are not as familiar, right? Like you're selling options to people, either options to buy or sell a security at a future price for a duration of time. And so you think of it like you're selling insurance, basically, if you're a seller of options. If you're a buyer of options, you're effectively buying insurance, right? And insurance is either the price is going to go down or up. And in either case, you're insured. So so much of this sort of simulating work was to figure out basically optimal scenarios when we believed that the options, the options were essentially mispriced, right? That either they were too expensive, in which case we would sell them, or they were too cheap, in which case we might buy them. So that was sort of the ethos here. And this is like, of course, we're not the first people to think of this. There are lots of hedge funds and quantitative funds that do this kind of work. And so that we were sort of trying to use smart machine learning to go after that path. And like I said, what ultimately we found here is like this was like a very leveraged space, and we like, you're going to play in a highly leveraged space, you want to have the money to do that, which we're not close to doing.
Also, a cooler part of this demo is we actually went far enough to create what's called an iron condor using this model, but I can't show you that because the API's changed and I haven't updated this for months. So it's kind of doing a different approach. Should I go into?
Yeah, let's see if anybody has questions on this. If anybody has questions on this, but I mean, like I said, back in sort of November, December, we focused away from this because we just didn't have the capital to actually do derivative stuff. Anybody have questions, thoughts on this before we move on? Sounds like a no. If anybody, oh wait, here we go. Yes. Aki, so let me double click into that question. So he asked a question in, this. So are you saying? Can you clarify the question a little bit? So like you're asking, this is what we're working on. Like, will it be a final? Can you? Yeah. What do you? I don't totally get the question.
Sorry. I think he's asking. Are you asking about the demo, or are you asking in general? Because this was just a prototype. We're not productizing. We've abandoned this one you're seeing now. We'll demo things we built since in a bit.
Yeah.
I don't know if that answers the question or not. But.
Yeah. Let's see. Demo prototype that the core team will keep working on. Oh yeah. Well, I mean, so it's sort of. Actually, I mean, we don't. The honest answer is we don't know. Like, there's a lot of. For us, like whatever we do has to be sustainable, right? And at this point, we were not able to at least get merit to sustainability. There are lots of things we can talk about in the brainstorm that there may be some paths to sustainability here, but the honest answer is like we don't know yet. So we're trying to be creative and figure out, is there a way? I mean, the whole purpose of this was to basically have a way to keep working on merit. Like that was the entire point. So, at least until now, we're not totally there yet, but we have, some creative ideas and we certainly haven't given up yet. So why don't we, Aki, come back to your question in the later part of the agenda, like the brainstorm new ideas and open discussion, if that's okay? Because because like there's a whole lot to talk about there. And obviously that's something we want to do is keep working on it, but we have to figure out, is there a way to even make that possible, right? So is that okay, Aki? I hope that's okay with you. Max, maybe we can keep going and then we'll circle back to that, okay?
Yes. So after the option trading, like prototypes we built, we started building a fully fledged trading system, which had we've built all these components. So there's a piece to do data ingestion. We have to pull in historical real-time data. We've built a bunch of algorithms. I think what's 21 plus now, and some are handwritten, some are traditional indicators, some are neural net based. We can combine algorithms and do something called boosting to improve their signal to noise ratio. We have several strategies that can handle slippage, things called bracket orders where they can get out of trades if there's a profit or or loss automatically. We do reversals and stop loss and profit takers. We've built a back tester, we've built a virtual broker that simulates real trading, and a back tester that does, simulates trades and simulates price slipping. And it could also do, on top of this back tester, we built something called parametric optimization, where all these algorithms have various meta parameters, and we can do optimization on top of them. And build software to train neural nets and label data and do various different machine learning pieces. And the last bit, which is the live trader, which can do live trading, paper trading. It's human controllable, so you could, if you think an algorithm did something bad, stop it or control various aspects of it, introduce new strategies in real time. And we currently trade with a piece of software called IB Broker. And one idea is that we kind of wanted to build it on a modern foundation. It's designed from the beginning for machine learning and multi-core GPU support and written in C++. And this is kind of like a really high level of the trader that we built, which has pulls in real-time data in trades with IB. We have this concept of advisors, which take one or more algorithms. They feed data into the advisor that makes an call to make an order or not, and then the strategy decides how to actually produce the order, how much to trade, how much to whether to ignore the signal or not. And that's kind of the high level thing that we built. If you guys have any questions about any of these little pieces, and then I'll show you some examples of like we built. One thing I didn't say, we built also UI for visualizing the results of backtesting, live trading, and analyzing the algorithms. And I'll show you that after this.
Cool. Questions from anybody on this? It's a lot of stuff. I mean,
yeah, I kind of went through it pretty quickly.
Yeah, no, I mean, to make sure people understand, I mean, it became clear to us that we need to build an entire like algo development platform, because otherwise there was not going to be a way to sustainably get what's called edge in the market. And I mean, edge means beating the market, right? So like we want to beat the market on a risk-adjusted basis. And the one thing we learned pretty quickly in the space is that like you can't just write one algo and have it make money forever, because you're competing in this world of other humans, other algos. And so it's always any little edge you find is going to get sort of evaporated over time as other people are finding the same edge and other people are exploiting the same opportunity. So it became clear that we needed to have this like continuous machine that was allowing us to like have edge, right? So that's where 5 minutes platform. Go ahead, Hobo. Sorry.
Sorry, it's my wife was talking.
Oh, you're okay.
Right. I say that edge has a shelf life. And so you need to be able to build algorithms quickly, analyze data quickly, and turn it around and be able to trade it quickly. So flexibility was kind of the underlying thing, and plus the idea that machines are not there to replace people, but to turn them into superhumans, effectively.
Yeah, that's right. So, okay, any questions on this? It sounds like it's just hearing the feedback from the community. Alexis said it's high level stuff. I understand what we're saying, but yeah, and I think that's true. I mean, there's some pretty significant machine learning and math under the hood here, and we can go into that, but it may be difficult for everyone to sort of to follow, and it may not be interesting, right? So to everybody, like might be only interesting to some people. So okay, so that's kind of the high level stuff that we sort of built. What do you think, Max? Do you want to like show some of it in action, or what do you think is the right?
Yeah, I could show. I'll show I have the UI ready here. So one thing we need to do is, I don't know about you, but I'm a very visual person. I like to see the result of the algorithms I build. And so one thing we did was we actually built a UI to visualize what we call runs, which are individual, like you set up the run by giving the software a bunch of strategies with kind of like what kind of symbols you want to trade, the algorithms you want to use, their meta parameters, and you could run it in backtesting or live trading. And so this UI handles both backtesting and live trading. So we've been doing some paper trading. So you could look at a run. It shows you just some general stats about it. This is a very small run. So let me show a bigger one. Hold on. I don't know. This was yesterday's. Yeah, so I've been doing some testing recently. So small scale for looking at the fill rates of real trading.
Yeah, so to give people, let me give some more context here so everybody understands. So what we built, to say it simply, is we built an entire algo development sort of an optimization platform. So we built a platform, and like that's part's hard to demo because it's all code. So I don't know exactly, like it wouldn't be that interesting to show, but like it allows us to write algos pretty quickly and test them. So what in the sort of quantitative trading world, or in any trading world, they call it backtesting. So you have all the historical data for a market, and then you take your algorithms, you apply them to that backtesting data to say, okay, what would we have done, a year ago based on what the market was doing? And then it gives you, so you run that simulation against the backtesting data, and it tells you effectively what trades you would have made and how much money you would have made or lost. So that's what backtesting is. And we built a framework that not only allows us to build algos, but to backtest them. And then we not only built that, we built the ability to like optimize. So basically, because we have these multi-parameter we have these multi-parameter algorithms, right? So they think of it like a polynomial with lots of coefficients, right? So a bunch of different variables. So we would run, the backtest, and then we could actually like change the variables and run it again and see like, did we improve performance or did we decrease performance? And so we used a meta algorithm to then in this framework called simulated annealing, which allows us to basically jitter these parameters and ultimately optimize the set of parameters in the algo to have the best performance based on that like historical period of time. And then of course, since we've implemented even more stuff to so that's all automated now. And then we have the ability to do that over some historical period of time, but then also in real time. So the system can not only backtest over some historical data set, like the last 3 months or the last 12 months, we can actually take real-time data coming in and use that data to then figure out like how to trade optimally for like today, for example. So it sort of does both things. So just to give you an idea, that's like what you're looking at. So what Max is showing here is this is our UI framework, and the UI allows us to look at both back tests, like historical simulations, as well as live trading. And so that was the, that's like what you're seeing here is the UI that allows us to sort of visualize either one. And that's important for us in building an algo development platform. Okay, the idea is like, okay, how do we, when you make an algo, sometimes it makes, like, you expect it to make more money and then it makes less money, for example. And so then you want to actually go back and look at what happened and understand like what was taking place. And so that's why we built the UI, which allows us to very quickly like look at live trading results and see what happened, or look at the backtesting results and see what happened. So there are some questions here. Max, do you want to go into this and I'll read the question? I'll look at the questions in the meantime.
Yeah.
Go ahead.
So one part of the task of actually designing and understanding algorithms is to look at them in detail, look at their output in detail, and we actually have the capability to display very algo-specific data on the graphs. So each algorithm may produce different bits of information, and I could spit it out, and we could display it here. Here, there's just a lot of information it's kind of designed for our purposes of quickly looking at the results. This is just looking at some paper trading I was doing. I could show you some historical data, might be more interesting. Let's see if I have anything interesting here. But part of the problem with the whole system is it's everything, all the algorithms, everything is very sensitive to how trades actually happen in the real world. Because when you make a trade in the markets, you actually you might not get the price you want. In fact, you'll get, your orders might fill at different prices depending on the kind of trades you do. And so one of the more interesting bits of backtesting building, let's see if I have anything, is to create a really accurate model of what's happening. And that takes a lot of work because you have to look at how not only the markets, you have to look at this, not only paper trading simulations, but how the software you're using, so we're using IB Broker, how they work, they have their own different quirks, and they have their own different things that influence how trades get filled, and we have to model not only the markets, but the software we interact with too. That just takes a lot of data. So part of this tool was to look at a lot of data and compare it. I'm trying to see if I have anything interesting here. So this is, hopefully I won't, hold on, I'm gonna cancel this real quick. Let's see. Sorry, I don't want to run out of RAM. That takes a lot of RAM because it could load a lot of data. Let's see if we can see a optimization run. Spectre, Technolozo. Sure. So here you could see the optimizer work. So what it does is as it runs the simulated annealing process, we actually run the process on a distributed system. So we have a couple of machines that we throw out the whole process into, and we can expand as needed. So we actually run this on a distributed processing system, and when we get the results, they get pulled into a central place so we can analyze them. And this is one particular optimization run out of a algorithm we call Spectre, and actually two algorithms. So one that opens a trade, a position, and one that closes a position. And you can see it starts out. This is kind of ordered backwards in time. So these are some of the returns it gets, and then eventually finds one that produces positive returns for that testing period. And this will load more data. Should be a little more interesting. And so here's all the trades it makes on this optimization run that where it found the really good meta parameters. And here you can see the profit and loss curve for this period of time. And I can kind of zoom in. You can see what it's doing. It's making apparently this combination of open closer makes very small trades during the first, I think this first 90 minutes of the market. So that's why you that's why you have these gaps, because it only trades in the first 90 minutes. Let's see. Yeah, so you could just look at the different outputs of the algo, look at how it performs, zoom in and zoom out. And yeah, so this UI is typically used when developing an algorithm and then just debugging it and looking at how performance. But the overall system, and also looks when we look at our live trading results and paper trading results. But we don't typically use it to look at the whole meta optimization process. We generate other reports for that, but yeah. The other stuff isn't very visual. Like I could show you what a optimization run might look like. I could maybe show you the file. So we built like a whole DSL for describing the optimizations we want to run. So I'll show you that. Pair test, I think that was the one I just showed you. I'll make the font a little bigger. Can you guys see that? Read that?
Yeah, I can see it okay. Looks fine. I'm assuming everybody else can.
So basically, hold on one second. Sorry, I've been sick for the last 2 weeks. So excuse my coughs. I have, so basically tell it, you want to do some optimizations for this period of time. You want to test over this period of time, and you describe the different advisors we have in our system. So we have this concept of advisor. You describe it, you give it the meta parameters you want to optimize, and then the symbols you want to optimize. And then what it does is creates a combinatorial description of the optimization, and then it executes it on a cluster of machines we have. And so this little language produces a lot of files that look like this. Scroll, and that gets executed on a distributed system. So, but there's no like UI to actually start the process. It's just a command line thing at the moment.
Cool. Okay, any questions on this stuff? Are people sort of, there's a lot, I mean, guys, there's a lot of software here. There's probably as much software here or more maybe than Merit Core at this point. I mean, like we worked around the clock to get this thing built, and we built it from scratch. So I'm not really sure. There's a lot here. So I'd understand if people were if there's a lot. There's a lot of stuff going on. Oh, sorry, Aki. Yeah, I type loudly. My keyboard is loud. I will mute when I'm not talking. Sorry for that.
I was going to.
There's a lot here, so people may, if you have questions, feel free to shoot them in. But I just want to make sure we're always zooming up to a higher level, like people understand. The point of this UI was to allow us to build better algorithms, to watch the performance of our system, and it does. I mean, Max, the one you're showing is sort of interesting. It does pretty well. I mean, just to, if people don't understand what they're seeing, do they know what the blue and orange dots are? Maybe I can explain that quickly.
Yeah, you could explain that.
Yeah, so what you guys are seeing here, so of course you're seeing the candles, those are the actual trades for this ticker over whatever period of time. Again, just so everybody understands, we built all this. This is not third party. This is like all our own software.
Including the graph.
Including the graph, like we built our own everything. And so what you see is like the blue dot is like where we open the trade. So that's where, like in this case, we went long. It's green, that means we made money, right? So like the green, like it was profitable. When I say we made money, to be very clear, that's in this whatever this thing is looking at. So this is
optimization.
Yeah. So this could be a back test. This could be a live trade. In this case, it looks like this is a back test. So
yes.
It doesn't mean, it means that the back test made money. It didn't mean necessarily that we made money in real life. It depends on what you're looking at in the UI. But in this exact example, yeah. So we bought where there's blue and we sold at orange. And that again, to be clear, in our system, in the part that you can't see right now, but Max may have it up on a different screen. The part that you can't see is that not only did we build the algo development framework, the data adjustment framework, the machine learning, the optimization, all that stuff, we built our own trading engine. So the system actually trades live. Yeah, so here, actually, this is it running now. Is this the same set of algos, Max, or this is?
No, this is just a test I was running.
Okay,
but this is a paper trading.
Yeah, so this is it. This is not trading real money. This is trading what's called paper trading. Paper trading works by, for those of you that don't know, the exchange sets you up with a simulated account that trades with the real data of the market and uses all their same systems. It's just that you're not an actual participant in the market. So the only primary difference is you're not affecting the liquidity, right? If you make like a $1 million buy order in paper trading, that's different than, of course, if you did it in real life, you would actually add to the real life order book, which this doesn't do. So as you can see, this is trading on a $500,000 account, and it's down 13 basis points, or a little over 650, well, almost $700. So this is just one of the algos running. I don't know, but I'm assuming this is not one of our best performers. Although, to be clear, like anything in this ecosystem, even your best performers are not going to make money every day. Like, they're going to lose money some days. They're going to, but obviously to win in this game, you want to have your best performers make money, more than 50% of the time, ideally. So here, for example, it's crushed on AMD. Like, AMD seems to be where it's just getting destroyed, but like on the other tickers, it's doing okay.
Yeah, the point of this test was to get fill rate data. So that's what I'm doing. So I don't actually care if it makes money or not. I didn't pick a strategy that would have made money anyway. I picked one that was kind of even with doing log and shorts.
Yep.
That makes sense.
So good question from Alexis here. How's the P&L so far with the latest algos? It's a good question. So we're doing a lot of active development right now. I would say right now we're going from kind of a V1, I would say, Max, to like a V2, right? And so, like, in other words, we're making some pretty serious changes to how the fidelity at which the platform operates and the ways in which it optimizes to get better results. So that's all kind of very much in progress, which means we've paper traded for the majority of 2019. We did a lot more live trading in 2018 in the last kind of months, but the system was very different then, so it's hard to know, like if that's representative of today. I would say that our best back tests from 2018, where are our best back tests now, Max? I don't want to say the wrong numbers. You probably have the numbers more fresh in your head. Do you have them? Do you remember them? Because I was thinking that our best one from 2018 is probably like 32%, something like that.
That's about right. Yeah, about 30%. So, but to be clear, like, so the fallacy. So in this, a lot of people rely on backtesting, and unfortunately, backtesting is a fantasy, right? it's you're building a fantasy world that you're operating in, and so a lot of funds actually do well in backtesting, but don't do well trading live. And so, in fact, the optimization procedure we have built is so good, and so it finds ways in backtesting to always make money. Like that's not a problem. But if the backtester doesn't reflect reality in any meaningful way, it's just fantasy. So we're putting extra effort where I think a lot of people don't, is to make sure that our fantasy world that we built, called the backtester, is as accurate as possible. So like it would have, if the backtester lost money it would have lost money in real life, and if it made money, it would have made money if we traded that way in real life.
Yeah, that's that's one of the hardest parts of this whole ecosystem, is basically modeling reality. A lot of people who go into this space, their backtests make money, but then they don't make money in real life because they didn't model reality in some important way.
Yeah.
So that's the thing we try to think a lot about, is like, how can we better model reality?
And we've looked at before. I mean, obviously before we start, we looked at what other piece of software, what other trading systems are out there that we could start with, and what can we do. And I was pretty unsatisfied with their backtesting procedure. One, they typically didn't have good optimization approaches, and two, their trading models are very simplistic.
Yeah, it's true. Okay, Max, anything else we want to show here? We're getting a lot of questions at a high level on strategic stuff, which I want to get to.
Yeah, I mean, nothing's unless there's some serious nerds here. There's nothing to really
dig into more. Okay. Does anybody else have any questions you want to ask about the actual demo stuff, the stuff we've built? I mean, I see all the strategic questions. I tried to write them down in the doc here. Some other people wrote their own in, so we'll definitely get to those. But those, if you look at the agenda, those come after we show the software. So we're showing the software now, and then we'll come to discuss existing and new and progress and brainstorm new ideas and open discussion. So anybody else, any other questions on? Oh, yes. Sorry, Hobo, good question. So Hobo, good question. Who's the competition here? Is it the big banks? Yeah, it's actually, it's largely not the big banks. So in this type of software, what you're seeing here is typically what would exist inside of what's called prop funds or proprietary funds. So there are a number of proprietary funds here in the United States. There's a number of them in Chicago, some are in New York. But proprietary fund is a fund that some number of wealthy individuals put their money together. So it's their money. So it's not, the difference between a proprietary fund and a hedge fund is that a hedge fund manages outside people's money, right? And a proprietary fund manages their own money. And so proprietary funds can be more risky. They can do more, they can take bigger risks, take bigger bets. So proprietary funds often make much more per year on a percentage basis. But this is my understanding, by the way. Not all these numbers are public, so it's not like you know. But this is what I've been told and kind of understood from the market. Is proprietary funds can make like a lot more per year, but obviously they have more risk, so they might lose money some years, that kind of thing. Whereas a hedge fund is typically, going to be less aggressive because you're managing outside money. And when you manage outside money, people can withdraw their money anytime. So if you get really aggressive and you have a bad quarter, like people can just take their money out. So this kind of software, you'll typically see it inside what's called prop shops or proprietary funds. You might also see it in select hedge funds, but those would have to be pretty advanced hedge funds that are doing algorithmic, like technical trading, because a lot of hedge funds today are still like what, I don't want to use the word old school, but like classic stock pickers. So they just like, you have humans looking at charts and being like buy, sell, or they're doing fundamentals, right? So only a handful of hedge funds would have this sophistication on the trading side. So to answer your question, the kinds of people who would have this software would be proprietary funds or hedge funds that are relatively advanced and technical. I don't think the big banks, this isn't really their jam. I'm sure big banks might have a desk, like a trading desk that does some of this stuff. It depends. But in that case, it's typically a small part of their business. As I understand it, I'm far from like an expert, but that's kind of my read on the space.
Also, I do want to make a thing, which is like, it's the goal is to find edge, and in fact, the way we think about it is like not who we're competing with, but how can we not compete with, right? Because if you get into a place where there's a fierce competition, there's not edge. So you've got to find parts of the market that are less, where there's fewer people actually doing work there, and find edge there. So it's a big search problem. The way I think is, if we could be in a place where other people haven't looked yet, that's great.
Yeah. Cool. Okay. So other questions on this? So this is, I see these questions. Hobo, good question about sell, manage, at least. Let's come back to that in strategy. How does this tie into merit from Deloria? Of course, we'll come back to that in strategy. Alexis, hopefully we answered your question. I'd say our best back tests from 2018 are kind of in that 30-32% kind of range. And then for this year, I actually think our back tests are up almost probably the same amount, like pretty significantly already in 2019. Where we're not live trading very much, like I said, because we're changing so much so fast. And so we'll probably start live trading again, if I had to guess, in like May. But also like that depends on capital. And like I said, there's hardly any left. I mean, that's the irony of the whole thing, which we can come back to on the strategic side, right? Is we built a system that largely was designed to take money and turn it into more money just in time to effectively run out of money. So like that, I get that's the ironic sort of sad thing about this is like we built some cool stuff with this intent, and then we weren't able to get kind of where we wanted to go. So, okay. So any other things? No more high level questions about like, how does it work or other things like that. So we can move on to strategy now. Is everybody ready for that?
Okay. I'm going to stop sharing, I guess. If there's nothing else I could show.
Okay. Yeah, that's fine. Okay, so let's if more questions come up on the technical side or on the underpinning, then we can talk about it. So let's start to talk about some of these strategic questions, and let's talk about what this means, right? So just to clarify, because I think some people came late, so you probably didn't hear what I was saying, as evidenced by some of these questions. So just to revisit some of that. So the journey here, to be clear for everybody, was we started with the intent. We started the Genesis block sale. We started it later because we thought crypto was going to come back. Crypto didn't come back. Genesis block sale into a massive bear market. And GBS was multiple orders of magnitude off from where it needed to be. So that's when we said, we got to get creative. Let's figure out what we're going to do. And then we said, okay, well, we have smart engineers. What can we do with smart engineers? Let's try to figure out how to take money and turn it into more money using software, because that's all we can, that's what we do. So we built a set of algos. We built a trading platform. We started in crypto. Crypto didn't really had a number of systematic challenges for us that we thought were risky and not appropriate. So then we did derivatives in the U.S. markets, and then we did finally like U.S. equities. It's worth noting that this platform can be applied to largely anything. So we built a lot of generalizability into it. Just we have to have areas of focus as we started to develop the algos. So when, let's start with the highest level question, because I think that's maybe the big piece here. So Deloria's question of that's a really good question, Alexis. Let's write that in the doc. We should absolutely talk about that, because the answer to that question surprised me, by the way. So, this question of how does this tie into merit? So the whole point of this, Deloria, hopefully it's becoming clear. Our whole point of this was to find a way to extend the funds of the GBS. That was the whole point. So we said, we know we're not going to raise enough, so let's try to make a multiplier on what we raise, right? So that we can multiply that money into be enough to sustainably run merit. So in the beginning, that was the intent. And the whole idea was that this could just exist behind the scenes. Nobody in the merit community needed to even know about this, right? Which is part of you might be asking, why didn't we demo this 6 months ago or 3 months ago? Because it wasn't evidenced by some of your questions, right? Some people are saying, how does this tie into merit? How does it fit? Well, we didn't know if it did fit, right? The whole point was we were in an emergency panic situation. it was absolutely clear that the GBS needed 2 more zeros at a minimum to be close to competitive for allowing us to survive. So the original ethos was turn money into more money. And so the idea was, okay, that can just sit underneath the hood. We don't know if this is going to be a community facing thing or not, right? That was the beginning. And so as time has sort of passed, a couple things have happened, right? I'm sad to say that the GBS stuff got worse. The crypto market got worse. So it became clear that we were not going to be close. And also, like, we spent more money because it takes money to operate the business, right? Every month we have to like pay salaries and pay for servers. So our money dwindled more, and the GBS was sort of continued to be not a success financially. So that's sort of, if you fast forward to now, like the month of March, right? Let's say, I would say we are in what I would call overtime, right? Like we're way past the amount of time. I mean, we were only supposed to be funded until December 2018. And we are like, we've been trying to keep everything inching along in a way that has been financially difficult for all of us, because we just don't, we're not funded for this and we didn't have the capital to do this. So when you zoom out and you say, okay, what do we do with what we have now? That's a different question, right? Because to be very honest, the point of this was to multiply the GBS earnings. The GBS earnings are so small that at this point we can round them to zero, and it doesn't this won't work in that context because it's way too small to be useful. The idea was to say, okay, let's assume like we're 1 order of magnitude off from the broader ICOs in the market from when we started the project. Okay, then maybe we could make it work. But being 2 more orders of magnitude off, it's not close, because what we have now isn't even enough to fund the team. So our original instinct or original plan is not really panning out. So I think there's a bigger question now, and hopefully that helps people understand with clarity how we got here, and now we can think through it together. And I'm sure, we'd love to hear from the community if there's any insight or ideas, but like, you have to remember every decision we made was at a point in time with certain information and certain progress, right? So those are the decisions we made. I'm not defending them. I'm just telling you those decisions. And then here we are, we have this thing that I actually think is pretty cool and pretty powerful. We just don't have any money to trade with it, right? So there's that sort of problem. And there are all kinds of ways that it can be integrated into the Merit ecosystem. I don't know if any of them are good ideas or not. Well, that's like a decision we would all have to make. But let me talk at a high level about what we've explored so far, so everybody understands that. So hopefully everything I just said makes sense. Those were the decisions. That's like how things progressed. That brings us to now. If you go back a couple months, when we realized that the GBS was still sort of failing and that the crypto market was not broadly coming back, that's when we started to reach out to investors to see, like, are there other options, other opportunities? As I've mentioned in my written post earlier, there was effectively no interest from the crypto community of like, and by the way, that wasn't reaching out to them about this trading stuff. It was reaching out to them about Merit. There's no interest in crypto, like nobody was investing that we were able to talk to in the crypto world. So then we said, okay, well, like, what are our options at this point? Because we don't even have enough from the GBS to like turn it into more money. So, it's tricky because our original thinking was, well, one thing we could do that could potentially, so not our original thinking, our newer thinking, probably this is like as of January or February, our original or our evolved thinking was, okay, what if we can show the world some of this software and use it to benefit the Merit community in a more direct way? Because of the original plan was to, as I said, kind of keep it as just something we use to manage assets for the Merit Foundation and extend our runway. We said, okay, well, what if we can use it to be a more public part of what Merit is? Like, what if it could be a feature somehow? And so then the question is, okay, how do you make it a feature of Merit? How do you make it a benefit to the Merit community that people can see and feel and touch? And so the idea we had there is something I call the Merit Central Bank. And so the idea would be that, you have this thing called the Merit Central Bank, and that's just the Merit, it's basically the Merit Foundation we have this thing within the foundation we call the Merit Central Bank that takes the money we raise in the GBS and we invest it into this fund, right? And by the way, the Merit Central Bank can invest in multiple funds. This could just be one, right? Like using our own software, we could have a separate entity that is a fund, whatever that's called. Let's call that Merit Capital. So you have some Merit Capital fund that can take money from the Merit Central Bank. It could take money from other people too, right? Like it's its own fund. It can do whatever it wants. And then the Merit Central Bank can also invest in other funds and sort of so almost the opposite actually of, I forget who asked the question earlier. I think it was Hobo. Basically the opposite of what everybody else has done, which is take ICO funds and use them to buy marketing to just get more people into the community, until the music stops. I call that like it's like the Ponzi scheme of crypto. That's why crypto gets such a bad rap, is because people use this money to buy more ads, which buys more hype. Like it's a hype cycle thing. So we said, okay, what if we took the funds and we put them into this investment vehicle, and we use that investment vehicle. So whatever vehicles we invest in, say we invest in 3 different funds, one of which is Merit Capital, we could take the returns on those assets and then buy back Merit from the open market at like the net asset value, some adjusted net asset value, so that we're keeping some money in reserve or whatever. So then that creates like a stable plus kind of coin. Does that make sense? So the idea was, okay, say we raise $5 million in the ICO or the GBS, and we have, there's $5 million in the GBS, and then we can invest, let's say we take whatever, 500,000 of that or $1 million of that is for operations. We take 4 million, we invest it into these vehicles, and now over time that money is earning a return. So then we can effectively buy back Merit at some fixed price. We could just build our own bots to do that, right? So we can basically market make across a variety of exchanges to provide liquidity on those exchanges, and as well, I call it like a stable plus, because the idea is not to keep it stable. The idea is to create a floor, right? That the floor is the net asset value. So instead of taking the money and investing it in hype cycle marketing, we could take the money and invest it in returns, right? Actual assets that we can then use to buy back. So that was the idea of the Merit Central Bank concept. So that was the evolution of thought, was, okay, what if we have this idea of the Merit Central Bank? Then we could use some of this software. We could use this whole idea to basically create a stable plus foundation for Merit. And theoretically, assuming that our investment decisions are not terrible and that we don't like fuck it up, that like the asset value just goes up over time. And so now you have a coin that not only has all the usability features of Merit and the social features of Merit, but like has some stability on the price floor side, and ideally, hopefully not, but ideally not like a ceiling on the top side. So it would just keep going up in value, just like if you were to put your money in like a hedge fund. Theoretically it should continue, generally it should trend up. It might have down years or down months or down quarters, but ideally trend up over time. So that was the idea. And I actually, for what it's worth, I still like that idea. The thing that is worth noting is that I took that idea to our lawyers, and the feedback was very clear that that idea has a lot of risk associated with it because it's relatively new, it's relatively out there. And the thing about anything that has the ability to manage investments, like there's a lot of regulation, there's a lot of compliance work to do. So their feedback was, the minimum legal cost we would be looking at to set something like that up is $200,000 US. And so we didn't even come close to raising that in the GBS so far, right? So so the problem with that idea, as much as I like that idea, is that we don't even have enough to cover the legal costs of that, right? Let alone, because there need to be enough funds in the GBS to cover the legal and then actually have money to invest, right? Like that's how the numbers work, right? You have to cover legal, pay for the team, and then invest money, right? So there needs to be a significant amount of sort of assets raised to make that work. And as I said, we're nowhere close to that, right? You'd have to add, at 50, let's call what we're at like $50,000. Like at $50,000, that doesn't cover a month of expenses, right? Like you'd have to add 2 zeros, right? Like to get even close to being able to like fund the team, pay for the legal, and then have assets to go invest. So that's the tricky part about that. Now, to be clear, I still like that. I still think there's a really interesting opportunity there. The idea of the Merit Central Bank, or the Merit Decentral Bank, or whatever, I think there's a lot of power to that notion. And I think it would solve a lot of usability problems in Merit and in crypto generally, because one of the big problems with usability is like it's not usable when like the price drops, right? So that is a usability factor, no matter how good the software is. And that's the problem with crypto today, right? The problem with crypto today is it doesn't matter how good your usability is if if the crypto market cap is down 85%, right, from December of 2017, there's no usability in the world that's going to make that a good experience for the user. Like that's a complete garbage experience for anybody. That's an everyday user, like my parents or my brother. Like that's not going to work for them.
And what worried me too was that even Bitcoin, a lot of people have dropped using Bitcoin for purchases. Like a lot of businesses have dropped.
The retailers we talked to had no interest. I mean, basically, as soon as in the second half of 2018, I mean, there was just zero. Everybody was just like, yeah, we don't care. Like it was cool when it was going to 20,000. It's not cool anymore. Like that was the retailer perspective that we got. So the open question here is, so now I hope I've answered like, how does this fit? Like, at least I can explain what our intent was and what that evolved to be with the notion of the Merit Central Bank. And now we're at a place where I don't even know how to do that legally at this point without, it doesn't seem like the assets are there to do that. So let me pause there because there are lots of other questions here, but what I just said hopefully gives everybody a broader framing so they can at least understand the mental model of like where we are, right? Like we are where we are. And so this is the reality of the situation. And now we have to deal with that reality. Yeah. So Aki, yeah. So to Aki's point, I mean, I think, or to Alexis and Aki's question, or Alexis's question and Aki's answer, I mean, the legal numbers we were told were in the $200,000 sort of ballpark to handle the legal of setting up the various entities to make all that work. And then anything on top of that, we would have to invest, right? Like would be for the investment fund. So yeah, Aki probably has a pretty good point there is like $500,000. Yeah. So 500K is probably like what it would take is like the baseline of like our costs, right? So 500K would be like, okay, covering the legal stuff, covering the team for a while. And then everything above the 500K we'd have to invest. So like the problem with having a number that's too small. So say the number is 600K, like let's say we can make the GBS raise 600K. The problem with that is that if 500K goes to expenses, there's only 100K to invest. So then our buyback model doesn't look very appealing anymore. You see what I mean? Because like now our asset base starts at 100K, not 600K. So people, so the numbers look better if it's like 2.5 or 5 million, right? Because then if it's 2.5, then 500K goes to expenses, 2 million we can invest. So now the buyback structure on the open market looks better because we're starting with a better net asset value. So the higher, the better. The threshold is probably like 1 million, right? Because like anything below 1 million, because even at 1 million, we're only investing 500K of it in the markets. So like, people that puts people in a tough situation because you put in $1 to the GBS and we're only going to buy back that dollar at 50 cents in the beginning, right? So that's the ceiling we're putting, or the floor we're putting underneath is half the price. So it looks better the higher the number is, right? So if it's 5 million, okay, and then we put 500K into assets, into expenses, and 4.5 million is invested, that's a different situation, right? Because now that you're talking about like 10% of that is actually going into the cost structure and 90% is getting invested, which means for every dollar you put in the GBS, we could offer to buy it back at 90 cents on day one. And then over time, as we invest, that number goes up. And then so at some point, we're actually buying back from the open market at a price that's higher than what people bought at the GBS. So basically, the higher the number is in the GBS, the better it would be. Anything lower than 1 million, it's a tough situation because now, our initial buyback structure is like half of what you put in. So it just starts from such a low point. Hopefully that makes sense mathematically to everybody.
Also,
makes sense? I hope it's clear.
Even at that like abstract level, the more you have, the better preferential treatment you get by exchanges, the better prices you get for trades. In fact, you perform better overall as the number goes up.
Yeah.
just outside of the mechanics of trading too. Like, I mean, inside the mechanics of trading too. So
okay, let's see here. Let's just 2,000 sat in mid-October to 1,000 sat in early November. I guess I'll remember the change difficulty gaming by a well-known user. There's no fix. This drove the price down even more. In my calculation, you would have needed a 4,000 sat MRT daily price average in GBS. Yeah, you know what? I haven't done the math on it, to be honest. I'm guessing your math is probably right. But yeah, just to be clear, the big, hopefully my numbers from earlier made sense. I mean, it's basically like we have to, the problem with this whole model is there's some fixed cost up front, which are legal and the team. Everything above that, we can go and invest. And so the problem is we're just not even close to this first number. That's the problem, at least so far. So, okay, let me pause there. Does anybody else have questions or thoughts or insights? Because this is a great time now to discuss ideas, right? Because I've given you kind of our evolution of thinking, right? This was supposed to be under the hood to expand Runway. Then we had the idea of the Merit Central Bank, right? And now we're here, which is like, we don't really have the capital to do either of those things. So, but we have, you know, we've been working on this stuff. So now the question is just like, what can we do, right? What are the creative, interesting options? So if people have those ideas now, feel free to share them or bring them up in that context. Obviously, you know, we're gonna have the town hall on the 31st, so we can bring that up there, and people might have time to digest what they've seen here and think creatively about how to link the things. I get, just like everybody here, that if you look at both things, there's not an immediately obvious, like, here's how you connect them. But I hope I've been able to explain to people why we did what we did in that order, because, you know, ultimately the goal was to try and survive the storm, right? Like we knew that winter was coming in crypto and we wanted to turn our money into more. That was the whole ethos, and building a system that turns money into more money is actually a useful thing to have, right? So that part is great. It's just that you need money to turn into more money to make it useful. So that's the little bit. So other questions, now's a good time if you want to reiterate your questions to reiterate them, because I didn't answer some of the questions because I felt like people didn't have the context. So that I was just trying to give the context first. Yeah. So does anybody want to reiterate a question here that they asked before?
I do want to add one more thing, which is I think the understanding why we did the things we did, because is important, because otherwise, yeah, you look at that and you're like, how does that connect with that? It makes no sense. If we just understanding that chain of thought is useful, hopefully, for you guys to understand why we arrived at where we are, even if it was the wrong chain of thought or the wrong decisions. That's a different thing.
Well, yeah, and I think it's impossible to know what a wrong decision is, right? Because I respect everybody in the community's opinion to be, you know, say like, you should have done this, you should have done that, you should have done this. Like we don't know. Like we could go back, if we had a time machine, we can go back in time and do something and see what would have been different. I have my own opinions, right? Like I have my own skepticism when I hear people say, oh, if you just engaged in Discord more, you'd have raised 50 million. Like, okay, great. Sure. Okay. Like how can we prove that? We can't prove that, right? I don't think that's true, but like we can talk about it forever. So like there's lots of these like things that I think largely are not meaningful areas of discussion, but definitely, you know, I don't think it's our place to defend our actions as much as to say, here's what we did and why. You know, like anything, you know, you try to make better decisions over time. You try to course correct. You try to fix mistakes. You know, that's what we're trying. Ultimately, what we've been trying to do. You know, but looking back, I don't personally have, for what it's worth, because I'm sure somebody would ask this question if they had enough time. You know, I don't look back here and see one clear like path to victory. Like looking back, I don't see one thing we could have done that was like that would have changed the whole set of outcomes here. There maybe is one. I don't see, like, it doesn't come to mind for me that like, oh, look, if you just started, you know, quant trading earlier or something, like, I don't know. I don't see like one thing, because we the timing was just so bad, launching right into the face of a recession, right? Like, a crypto bull market or crypto bear market. So, okay, cool. So Alexis, you're going to hold your questions. Anybody else have questions or thoughts? I'm just looking through the other questions to see here. Hopefully I've answered some of these things. Like, what will the core team work on in the future? Like I said, I mean, we're trying to figure that out. How does this integrate with the core features of Merit? Yeah, so this, hopefully I answered this, right? Like, it doesn't integrate with the core features of Merit. The intent was not for it to be a user-facing thing in the beginning. You know, but there is an interesting assumption here in this question, whoever asked this question. If no, then it's just a separate project which can use another newly created coin. Yeah, so, right, so the assumption there is that we would link it to any coin, right? Like, this doesn't have to be linked to a coin at all. Like, this could just be a hedge fund, right? So that's like a path. And for what it's worth, I sense that if we go down that, like, let's say we try to take traditional investors and try to do like a traditional hedge fund, I don't think they're going to want to touch tokenization, right? They're just going to be like they're not going to want the legal risk, is my guess, but I could be wrong on that. So yeah, so there's an interesting assumption there, but yeah, the point here was not for it to be a user-facing thing. I think if it's going to be user-facing, the most interesting thing about it is this idea of the Merit Central Bank and creating like a net asset value that actually, it would be us backing Merit with something more than hype. That's the idea. And that's what's special. I don't know that it needs to be hooked to Invites or MLM or Alias. Like, I don't think it has to be hooked to any of that. It would just be adding this new kind of feature, which is like stability in the price, ideally, or at least some kind of price floor, which, you know, like I said before, is a bit tricky given the capital situation. Sell it, manage it, lease it. So this is that's actually a good question, and one we didn't answer. So, you know, and that's a creative discussion. That's one we could have. Really good question. I don't remember who asked that. But I think it was maybe Hobo. But I think that's a really good question. There's a world where that's one way we could tie it into Merit. Who knows? Like, we could maybe make a more user-facing platform that people could use, and then we could like charge Merit. Like, you know, you could pay for it at MRT, or do like a Binance coin kind of thing where like the more Merit you hold, the lower your fees are, or something. There's something that we could explore there creatively. I haven't thought a lot about it. Yeah, but it's potentially worth thinking about. Any other questions, thoughts, feedback, strategic stuff anyone wants to dive into right now in advance of the town hall? Let's give people like a minute or two in case any other questions come to mind. You guys can also ask questions vocally too if you want. You don't have to just type. But in case somebody's typing right now, I want to give them some time to finish their question. Max, anything to add while we're waiting for any last question?
I just want to add that I also really like the idea of stable plus. For personal reasons, even like outside, I think it's a good idea for a currency to have a stable floor. One, I mean, it'll add, you know, people will feel more comfortable that it's less of an investment and more of a, if there's less risk there, like in people's eyes, it's more, that's part of the user friendliness, right? Like people using something in their day-to-day aren't thinking like, aren't thinking in that way of, this is an investment I'm going to keep and hold, and versus a commodity that you use. Also, because of how the world works, and that most of the new money goes towards the top and in these asset markets, it's just an interesting idea that instead of taking money from people who, you know, one, don't have a lot, or you know, it's much more precious to the majority of people. it's more interesting to me to go to a place where where the more the money is anyway, and how do I put it? Make the coin stable there, because the hype, the hype train and the hype bubbles to me are so, I don't know. They seem immoral almost. It's taking advantage of vulnerable people.
I agree. I think I think
so. There's personal reasons I like that idea better, because providing more stability and taking, I don't know, I call it like transvestment. It's a transvestment from one sector of the economy to another.
I agree with you. I think it's fundamentally better to do ethically to build something sustainable. But I also think it's just the better, yeah. And I know people in the community are upset that we didn't do like the common playbook everybody does, but sorry, not sorry, right? Like, I don't believe in that playbook. I think that playbook is fundamentally flawed. I think, sure, it might make people money in the short term, but like it does, the numbers do not work. They fundamentally don't work. So
it'll make a few people money. Let's say Merit gets on, we put Merit on exchange, we hype the train, the price goes up real quick. If you don't get into that real small time window, which a majority of people won't, only a few people are going to make a lot of money, and the rest are going to be.
And Max, I think I get that. You get that. I think a lot of people in the crypto community get that. I think the people in our community get that. And look, my sense is, and I don't mean this in a bad way, but I think the people who are asking us for that, I think they get the game and they're okay playing the game by those rules. I'm not going to judge that. That's fine. I'm not okay playing by those rules. I don't think you are. And I think that's part of why we did what we did, right? Is we built something that was a much bigger, more sustainable play. We knew it was higher risk. And I think we were okay walking away from the table, right? We're okay. If it doesn't work, fine. I'll get a job. I'll buy back the GBS Merit as I'm able to. Fine. But I'd rather do that than take advantage of people via this hype cycle marketing thing. I think it's fundamentally unsustainable. I think it's fundamentally unethical. And I don't want to do it. There's at least 1,000 other altcoins you can go buy that do that. So if that's what you want, go get that somewhere else. But it's just not.
Well, I also think they generally damage the perception of cryptocurrency. Mm-hmm. And
right. And the crypto community uses these terms today, like commonplace, like a bag, right? Because you're left holding the bag. It's kind of funny. We joke about the fact that we take advantage of people. It's largely a disgusting practice that doesn't make any sense. And there's a reason regular people don't use it, because it's it's kind of a shit show of a community. So, that's just not where I want. Yeah, that's not the legacy I want to have. I get that we could go that path and make some people money, right? And the rest of the community is left holding the bag, but not interested. Yeah. I'd rather fail and just walk away.
Well, and the game kind of ruins it for people who actually care about the technology and want to build it out and want to make it usable and want to make it mainstream. And I don't know. I'm actually quite upset about it. Personally.
Yeah, Alexis, that's a good question. We just have such limited resources now. So we'll get there. We'll probably circle back to it. Right now, we're just we're still candidly, we're still trying to scramble to see if there's something we can make work on this other side. So we'll try to make the time for that. And I think it's what you're describing, Alexis, is not a difficult technical problem. We just have to make the time to get there. And it's just tough because there's just a handful of us now, and we're just spread really thin. So we will try to get there. Okay. I don't know that there's a whole lot more. I think we covered a lot of good stuff here. Max, you had some great parting words there. I added a little bit to that party, but I actually think that's a really insightful point on your side, Max, that I think people need to understand that our perspective is very much we'd rather just not exist than be not sustainable. So and I get that not everyone's going to be okay with that, and that's fine. But that's the ethos of why we took these bigger bets instead of taking these smaller bets. And that's why we haven't played by the standard crypto playbook at all. Is because we wanted something that we thought would actually work over the long term. Basically,
yeah, Is that, I don't know. Maybe that's the definition of stupidity. That's not playing the game. But
Yeah, I don't know. You know, yeah, maybe we're not the right people for that kind of environment. I don't know, but like, you know, it is what it is. So, I appreciate everybody coming. This was good. I enjoyed it. I hope other people got something out of it. Excited to hopefully see some of the same folks back at the town hall. I hope people have some time to reflect on, you know, now that everybody, you know, I think we're trying to be as transparent as possible here so that everybody can see the journey, understand the decisions, see some of the software, and like, you know, the best way that people can help us is like, the best way to set people up to help us is to make sure you have the same information we have so you can think about the same problem space that we're thinking about. And I do think we have, both in Merit and some of this new software on the trading side, we have like some pretty powerful, interesting software that I think is quite meaningful. It's just now a question of finding a way to make the things sustainable and ideally somehow linked. So feel free to reflect on that, folks. If you have individual thoughts, follow-ups, don't hesitate to reach out. Email is just the best way to reach me, I think, right? So adil@adil.io, or adil@merit.me, max@merit.me. And so happy to engage in those conversations in the next kind of 9 or 10 days. And then hopefully we can have some interesting discussion in the next meeting. Thanks, everybody. Appreciate it.
Thank you.
See ya.